How to deduct business vehicle expenses. If you use a car, truck, or other vehicle for work, you may be eligible to deduct vehicle expenses on your taxes. For many small business owners and self-employed individuals, this deduction can be a valuable way to reduce taxable income. However, the IRS has strict rules, so it's important to understand how deductions work and how to track your expenses correctly. Who can deduct vehicle expenses? You can deduct business vehicle expenses if you use your vehicle exclusively or partially for business purposes. Commuting from your home to your regular workplace does not count as business use, but driving to client meetings, business errands, or temporary work sites does qualify. 2 methods for deducting vehicle expenses. The IRS gives you 2 options for claiming this deduction. 1. Standard mileage rate for 2025. The IRS will set a mileage rate. Check the IRS website for the official figure. To use this method, you multiply the number of business miles driven during the year by the standard rate. This method is simple but requires accurate mileage logs. Example: if you drove 8,000 business miles in 2025 and the IRS rate is 65 cents per mile, your deduction would be $5,200. 2. Actual expense method. Instead of using the mileage rate, you can deduct actual expenses related to operating your vehicle. This includes gas, oil, maintenance, repairs, insurance, registration fees, lease payments, and depreciation. If you use your vehicle for both business and personal purposes, you must calculate the percentage of business use and only deduct that portion. Use clear records to determine the business use percentage. Record-keeping requirements. The IRS requires detailed documentation to back up your deduction. Good records include a mileage log with dates, destinations, and purpose of each trip, receipts for gas, repairs, insurance, and other costs, odometer readings at the start and end of the year. Using apps or accounting software can simplify record keeping and ensure accuracy. They help create reliable documentation for your tax return. Leased versus owned vehicles. Leased vehicles, you can deduct lease payments if the vehicle is used for business. Owned vehicles. You may deduct depreciation under Section 179 or bonus depreciation, depending on IRS limits. Common mistakes to avoid claiming commuting miles as business expenses. Failing to keep adequate records. Trying to deduct 100% of expenses when the vehicle is used partly for personal purposes. The bottom line: deducting business vehicle expenses can provide significant tax savings, but only if you choose the right method and keep proper documentation. The standard mileage rate works best for those with lower vehicle expenses, while the actual expense method may benefit owners with high costs or new vehicles. Before filing, consider consulting a tax professional like SK Tax Associates to ensure you maximize your deduction while staying IRS compliant. Recap: track accurate mileage, choose the method that fits your costs, and keep thorough records.